Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. The tariff debacle is continuing, and this is an important stream. You will want to review not only this stream, but the one from yesterday, which was one moment. So everybody knows I am streaming from Costa Rica in a unstable environment. If for some reason I cannot continue the stream in YouTube, you can use the link in the bottom of YouTube to come to the Bookmap Discord Trader Lab community. There's no cost, and you'll be able to access it there. It will continue. Otherwise, this stream will be posted later in YouTube for your review, and I strongly encourage you to review this stream and the one from yesterday. This stream's about integrating Bookmap Orderflow tools with auction market theory using a volume profile in the intraday developing time frame. It's based on structured trades that are available to everyone, as well as the Trader Lab community and the library of webinars, so you can reverse engineer and create trade plans. The Trader Lab's about the business of trading, helping traders understand how the market works, why it does what it does, how you can get in alignment, and also how to integrate Bookmap Orderflow tools, which is a high-tier order tool software product that might be able to help you. The whole key to the trading business is really statistical edge. So the focus of the Trader Lab is to help traders build the business and sustainability. The business of trading is not what most of us think it is. It is not indicators and time frames. There's a lot more to it. And I suggest no matter what you're doing, that you can probably enhance your trader development in the Trader Lab. It's different. It's an advanced trading process, and like everything, you have to find what speaks to you. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. This stream is based on structured trades, which I will be sharing with you. You can vet those trades and build them into a statistically based edge. And what is edge? Edge is creating a probability over a random distribution of outcomes that favors you versus the other participants. If the business model, just to make it very simple, is gaming, if you understand how casinos operate, you can understand the trading business. And that's a proven method or a proven business model. So instead of trying to spend your life trying to find the combination of indicators and timeframes, assuming it's not working for you on a consistent basis, then you might want to invest your time into learning how the market works and using the gaming business as a platform or model that's been proven to build a business on top of. And of course, you have to vet everything. You got to do the work. That's what Trader Lab is here for, to help you understand the business you're trying to be in. Here's the fallacy very quickly. The fallacy of our business is that we all have winning trades. It doesn't matter what you do. You could have nothing. You don't need a chart. You could have a random buy-sell generator, and all you have is a button, and you're still going to have winning trades. That's our problem, because random winning trades encourage us to keep doing the same thing, but focus on making it better. I'm going to suggest, and I've been trading going on 46 years now, that's not the answer. That's the problem. And again, it's just a personal opinion, but most of us do the same thing, and most of us walk in the same shoes. Now, let's look at the higher time frame, because this is very important. Now, I have to remind you, this is not a typical walk in the park. This is a seminal change in global economics. It is going to have substantial consequences, and I mean substantial. And if you're in Trader Lab, and what I post in Trader Lab, and I started posting early this morning, is the condition of the market, what you can anticipate, how you manage risk, why you might want to cut size, the thinness of the book, and that Fed Chair Powell was going to be speaking this morning, and that we can anticipate high velocity short squeezes. And why would I post that? Because Ben here done that. And it's not predictive, it's experiential. So you can capitalize on my experience and maybe leverage my experience and not do the things I did. Because I've done the same things we all do, except I did them many years ago and I did them for a lot longer. So because that's what seemed to be working, I just needed to make it better. That's called Trader Groundhog Day. Now, I want to show you something here. Now I can't even fit everything on the screen here. However, let me just try to find my levels here. 51, let me just try to see if I got, 5178 is a target down below. The current low of the day is 5153. It's under this consolidation. So we have, and here's the other targeting. And I'm only going to, this is what you call a broad stroke, okay? This level is around, and you'll see them on my book map in just a moment. You'll see how we use these. 53. I'm wondering if I'm in the right place here. I might have gone too far. But this over here is around 53.13. Then we have, these are called naked volume points of control. The next one's around 52.50-ish. This is called a micro composite volume point of control, and I'll explain what these are. 52.28, and then down here around 52.02-ish. And then we have this as our target down below, which we've already achieved. Now, and all this is posted in TraderLab, which you might find useful. Now, here's what this represents. In this area, this day here, and it's hard to see all this because it goes back so far, this was the retail price, the highest volume. And you'll notice the mark, we have a green candle. So we came down, we tested this area. Yellow line means high volume, and if it's too low, we can reject it. This day here, where we closed high, this was the highest volume. So it hasn't been checked. So it can be a target coming down. Let's remember that. Now, the next layer or level, come back here, is down here. This was from this day, and what happened is it was a down day, and we found too low, and we closed. And then we tested it the next day, too low. We rejected it. Key level. We come down here. Same thing, 52.02-ish. And let me show you the next couple other little pieces, and then we'll move right along. And remember, guys, you have to vet everything for yourself. Past performance is never indicative of future results. I think I lost a level here. Let me find it. I did lose a level. Too many levels, not enough time. Micro composite VPOC. I lost a level, but I will show you on Bookmap. Now, let's get to the RTH Open. Now, what I'm going to be sharing, and I do this every day in the stream, is structured trades that I've shared. There's 60 PDFs of these. You can download them if you're visiting in YouTube. There's a link down there. You can access the Bookmap Discord TraderLab community. There's no cost for that, as well as a library of webinars and PDFs of these structured trades. Now, let's take a look at some levels. Remember what I showed you. 53.12.50 is that naked volume point of control. 53, here it is, 12.50. It's on the chart before the RTH opened. The next level down is, let's call it around 51, 52. We have another one down here around 52.02-ish. And I know I've got another one in here someplace. I can't find it. So I'll come back to that for you. Okay, so that's the levels. This is auction market theory. This is how the market works. Now, what is it going to do? Welcome to trading. Randomness. How do casinos operate? 100% randomness, except They only play games that have an edge that fits them, that favors them. So if we can take that business model, which is extremely successful, and instead of trying to solve for confirmation and predictability, how about we acknowledge maybe we're in a business where it doesn't exist? Maybe then we don't try to solve for something. We try to solve for the environment we're in, which is 100% random 100% of the time. So if we solve for randomness, then we solve by using statistical probabilities, same as the casinos. Works good for them. And believe me, if they could predict anything, they wouldn't need to play games with an edge. But they only play games with an edge. So this is the RTH Open. We have our levels already on the chart. ETH mid, naked volume point of control, target down here. There's more. Stops under this low at the 40. This is the one I was looking for. So next target, this is called the microcomposite volume point of control. It is the highest volume from a previous location in an intermediate time frame. If you don't understand these things, don't worry about it. Another target down here. And then we have the ETH low, has over 90% probability. Past performance not indicative of future results. You got to go from there. Stops are sitting under here, and there's more. So anyway, that's just the high level overview lay of the land. Now, let's get down to it. This was a level that was too low previously, and we, took off from here. If we get below it or open below it, we're going to check it. If it was too low previously in the auction world, an auction, the way it works is high volume is a retail price, shopping. Well, if a price becomes too low in the store, you can't buy it there anymore, and the market goes up. Well, what happens if we are below that price, and now it is too high? In the auction, we'll say, no, I'm not going to pay that, and hasta la vista. And that creates a short in the trader lab. These are structured trades. You need to vet them. Now, I'm going to show you structured trades. Now, the thing about this is, if you're in Trader Lab, you would already know this. Now, it doesn't mean you can execute. It doesn't mean when the book is thin like this, that you just come in here like it's another walk in the park. I spent a lot of time this morning posting about risk management, thinness of the book, slippage, and how to adjust. Also, if this is not your thing, it's screenshots, narration, replays, and push the ball forward as far as your education goes. We all develop at different rates. Now, I've been through this kind of economic event, crash of 87, Desert Storm, 9/11. I understand outlier behavior. Many developing traders have never seen anything like this. So it's very important that you be in a community where you can get support, where there's some experience floating around that might help you. And it's not that you don't trade, it's that you understand the environment, what's different about it, and that you understand you're going to be stimulated emotionally by fight and flight and FOMO. All kinds of events are going to surface. This requires your utmost discipline and understanding of what you're doing. Let's go forward. Now, location. So let's look at this. So right here. Now, also, I posted this morning, not only that Fed Chair Powell is going to speak, that we can anticipate short covering and high velocity short squeezes, especially in front of Fed Powell. Now, it's not about predicting, because we can't. What it's about is experience and understanding mass behavior. In other words, behavior of the masses and collective behaviors. So in trading, we anticipate behavior. We don't predict it. We anticipate it. So I anticipate behavior, and just like you, I don't know. Nobody knows. So if you can accept you don't know, which is how the casinos operate, then what you do know is how to recognize behavior and change. You don't know when, you don't know if, you don't know how. That's not your job, because you can't. So if you can't know something, then the thing is you need to know you don't know, and then you need to know how to navigate that environment, just like the casinos do. So let's look at the first trade. Now, the thing, you guys have heard it terms in real estate, right? One moment. By the way, if you have questions, please post them. If you're in YouTube, I'll do my best to get back. Remember, if the stream has to drop out, I will, it'll continue as best it can in the Bookmap Discord Trader Lab community. I'm streaming from Costa Rica, a little challenging. Also, it will be posted later in YouTube if I have to drop out for any reason, but I think we're doing okay. Post your questions. If I can't answer them in YouTube, come to Trader Lab. Use the link down there. There's no cost for that. And you can watch this later. So we come up to naked volume point of control. Remember, it was too low last time we were down here and we blasted off. We get below it and it's too high. And the participants go, no, I'm not going to pay that. I'll see you later. This sets up a short. Let's look at it. And this is a Trader Lab structured trade. And again, I want to say, if it doesn't fit your trade plan and risk parameters, you cannot cut size or go to, micros. If that's appropriate for you, then you hang out. You go on sim. You educate yourself every moment in the market. You don't have to trade this if it's not in your experience and your ability to adjust risks to the velocity and volatility. This is for more experienced event. But if you have structured trades, you can get a lot out of a day like today, because if you develop a career in this business, there will be, as they say, other days and other events. But what we do in Trader Lab is generic in the sense of how the market works. So you would understand what to do because you have a vetted trade plan and the outcome is always random. So let's go. So we come up, here's what's material about this. We are looking for structured trades. Where's the structure? It's right there. So if I'm sitting in here, I'm looking at this go up. And the first thing that we anticipate, by the way, in a market under this condition that's heavily short is something called responsive buying. It happened yesterday. It is part of a trade plan. Responsive buying are those who are already short from yesterday, which I don't think we had a lot of longs coming in. What do you think? And if we gap lower, which we did, what might they do? Respond to the gap. And the responsive buying creates an upside rotation. So how do we work with that? Number one, we anticipate it. Number two, we look ahead and we go, where is our next level? It's right there. So RTH open is here, responsive buying. Now, this is a level, ETH volume point of control. This is more significant. Doesn't matter. Could be here, don't know. So come up here. Now let's look at the trigger. Location, location, location. No clue. Now I'm going to go into microstructure. Some of this is going to be advanced, Tapish. This is for you. And some of this is kind of bread and butter, Trader Lab structured trading. All of it is structured trading. Some of it is fractal. Now, so you understand, the 60 PDFs I've shared in the Trader Lab community were broad strokes to help traders build out a trade plan in business of trading. You don't need anything more than that to get started. You do need to organize yourself and start and get to work, because you can create a sustainable business if you do the work. And you will, like everybody else, go through a learning curve, and it can be miserable. And it takes more time than you'll ever imagine. No, I don't use any indicators. I use order flow and I use the auction, because the auction is the reason we have a market. What's too high, what's too low, what's fair. And this whole process is ongoing as the market unfolds. So I have to come back and look at what was too low, support resistance. This is another way to think about it. Well, if I open below it and I get my responsive buying, maybe this is too high. And I don't know that. So what do I know? Let's look at what we know. Look very carefully at what we know. We know we're opening below the overnight mid. We open below the overnight volume point of control. What we know is we can anticipate, not predict, responsive buying, profit taking from those who are already short, going, thank you for the gift. And this was support previously in the auction, and now it's too high, maybe. Don't know. Liquidity comes in the book here. Now we're starting to put order flow together. The book is thin, 19, 12. This is like trading the NQ. I didn't look at the NQ this morning. I was too focused here on the ES, but I can't imagine how many contracts are sitting in the book over there. So the book is thin, higher risk, slippage. You got to adjust, or you don't trade until the book thickens up. You got to become aware of all the elements. So right here, buyers are in control. Buyers are in control. Now, this is something I talk about from time to time when I can. This is the stop and iceberg detector. So the market's going up. Now you're saying is, well, how do you know the difference? Should I get in here? Should I get in there? Where should I get in? How about location, location, location? Think real estate. When you trade the auction, you already know where your trades might show up. You don't know anything else other than that. And there's no precision. Is it useful to know what this represents? What is the market all about? Isn't it really trying to figure out what something is worth? Well, we know that this naked volume point of control right here is a key level. We don't know what's going to happen. So right here, I don't know. I'm looking at that. Nobody knows. No, don't know. So buyers, now here's the stop and iceberg detector. 9 buy stops, 1 buy stop, 1 buy stop. Stop divergence. It's the only thing I use from my experience with indicators. And believe me, when I say indicators, I went down the rabbit hole for years with indicators and then trading systems. So I can put indicators and custom indicators on steroids so I can optimize, because I believed I couldn't get the job done myself eyeballing it. So I created trading systems. And all I did was more curve fitting and more random winning trades, but did not get an edge out of it. I got curve fitting. And that's the same thing that happens to any of us who are doing indicators and time frames, unless we can sort that out. And most retail traders don't. And that's why, in my opinion, and what I've observed and from coaching and training other traders over the years when I was running a desk, this is what happens. And psychologically, it's very hard to operate in this environment. So we seek predictability. So right here, stop divergence, 911, higher price. This is delta, and delta represents aggressors and it represents market orders, which are aggressors. Stops become market orders. Don't fall over your delta thinking there's a green light or something here. Not the way it works. When the sellers break below the buyers, let's look at this. Why did it go up? Buyers are here. Buyers are there, right? Buyers are there. Buyers are there. Buyers are here. There's a bubble. Sellers are here. Sellers are here. Just watch. Buyers were here. New high. Stops coming out. Okay. Buyers are here. Stops coming out. Only one. Higher price. Divergence. Buyers are here. Buyers are here. One stop coming out. Divergence. Going to the moon. Who knows? Do you? Nope. I don't know. If you do, let me know. Sellers under the buyers. Change. Right here. Location, location, location. See how the pieces come together? Now what? I have a trigger developing right here. I'm going to take you into microstructure. I'm going kind of like a little deep dive here. What I'm going to show you is a very advanced methodology. Trader Labs for advanced trading methodology. Everybody in Trader Lab has done what you've done. We've all been there. We've all done that. And depending on your results, you might find that Trader Lab maybe do something for you and part of the problem is defective belief systems not aligned with the business you're in. It's not your fault. It's not doing anything wrong. It's just not understanding the business you're trying to be in, which is gaming. So right here is the trigger. This is a Trader Lab structured trade. It is a trigger. You learn this in Trader Lab. It's in the 60 PDFs, but there's a lot more in Trader Lab. I never intended, I'm not a vendor, by the way. I'm just somebody who's done this a long time. And I've been through conditions, 87 market crash, 911, currency crises, Desert Storm, I don't even remember, but a lot of them. So micro high volume, remember, the sellers took over here. Location. Trigger, micro high volume is right in there. Now, so you guys understand why I'm doing this, and I'm always trying to do is help traders create structure. If you do not understand order flow yet, the result of the order flow can be represented here. When you learn order flow, you could be getting in here or here or there. Okay? So this is a structured trade. And just to give you something to think about, you have to vet this. You would put your entry on a limit order, one tick below this, and your stop could be 3 ticks above this. You'll run approximately a 3-point-ish stop. And all that is variable based on volatility range and the current condition of the market. Just saying. Okay, first trade. Now I'm going to go, let's move faster. But I kind of had to get this, and here's where you're trying to go. This is the developing volume point of control. Remember, this is a naked volume point of control. This is called trading in fractals. And fractals, the way I try to relate to it, when I was trying to figure all this stuff out many years ago, and I mean years, I relate to it like shopping. And that's the easy way to think about what an auction is. It's shopping. If a price is too high, shoppers won't pay it. I'm not paying that. If the price is too low, it's on sale, and you'll throw 2 in the cart. If it's a fair price, okay, everybody does business there. And in the fractals, this, at the moment, is the fair price until it gets rejected. I'm not paying that. Where's the next higher, quote, fractal or time frame? It's there. The current retail price. I'm not paying this retail price. Let's go back to this retail price. Watch. Scale. Now what? Well, is that the best we can do? Well, we came to a location. This is the same as that, technically, but we're testing this from below. If it's too high, where are we going? Back here. Then what? Let's get to the then what. Where's our targets? I got to find them. This is the next target down here. And under 45, we have stops. So that's just the first trade. So your scale would be at this yellow line, which is the current developing volume point of control, and then trade management. Watch. And let's watch together. VPOC migration. So this is too high. I label these. I made up these terms, VPOC migration. I did a specific webinar. It's in the Trader Lab. You can look at this about what this means. How do you use it? And what's sitting down here? Liquidity. Let's not forget that. Please give a like if you're visiting in YouTube. By the way, how we doing in Discord, and how are we doing in YouTube? Audio and the video and all that stuff doing okay? So let's watch. Watch the liquidity here, and let's just keep going. And I'm only going to focus on structured trades. I'll throw a little advanced in here for you, but it's not necessary. Because if you can't trade the structured trades, you don't need to get advanced. You need to build. What now? This is a target, and what happens here is very important. Now we're going to watch this. I have other targets below. I hope you're getting something out of this. Now, so far, there's one structured trade. And it doesn't mean that there aren't other ways to enter it. I just want you to be aware of that. Let's watch. This is important. And remember, the book is thin, so we're going to get targets are going to get blown through and run over. Just the nature of it. Thanks, Nick. Hey, Van, how are you this morning? So this is important. Let's look at what happens here. I have a sell sweep with alignment with the liquidity. If I get a sweep, and often what happens is we can get under the liquidity, but let's look at something else. Something else. Now, nobody knows. We can get under here, test this, and continue the Acapulco cliff dive. Or we can come under here, test, and reverse out and counter rotate. And that's all I know. And I don't know anything else. My job is not to know because I can't. So my job is to align and narrate. So right here, sweep, location, location. Right here, watch. I'm going to show you an advanced process now. And these are never trade recommendations. Everything has to be vetted. The volume is here. The support is here. The potential is to come under and come back above. If I don't come back above, it sets up a continuation short. One or the other. I don't know. What do you think? See what it does? Comes above. So right here is my resistance. So the trade could be over, or you're looking to put the trade back out again. That's where trade management comes in. So let's go take a look at this thing. This, now there's a couple ways you can work with this. If we come over this, it then sets up something. The condition is, if the trend is down, I hope you think the trend might be down, we have resistance in the following places. There, out here, in here. So let's see what, and this is where we would be looking to go. Let's see. Actually, over here, I should say. And 70. Watch. Why is this a short? Let's look. Now, we have structured trade and Trader Lab called, well, it's mid or VWAP to VPOC. So your entry, and this is structured trade. And again, you have to vet this for yourself. You know, there's nothing mechanical. If you're in Trader Lab, this is called the low volume node. And what this is, so you understand, is the retail price is here. Remember, everybody's happy at the moment in the fractal, but where it's too high, part of the joy, we don't know. But that's called the low volume node. And what what it does is the market can rotate. So if the trend is down, you're not taking longs unless you're a counter trend trader. And I would say if the advancing army is going south, you might want to just wait to get aligned with them, but that's your plan. Me, shorts only, or covers. So for me, a long becomes a get out of Dodge, and a short is a continuation trade because I want to align with the dominant side. I'm not interested in taking longs, but that's just me. There's other traders in Trader Lab who are going to trade both sides. You know, so there's our liquidity. Come up to our location. Liquidity jumps in the book. We have selling icebergs, and I have stop divergence. Does that look familiar? Right here, no clue. Buyers are here. Now right here, I don't know, except I have my divergence. I break under the buyers here. I'm under these guys. This is a trigger. Let's watch it. Micro high volume is up here. Let's just watch. There's more. Watch. This right here, and here are potential areas to get short. If you understand order flow, you'd be short here. If you don't understand order flow, when I draw these lines around for you guys to see, what I'm doing is I'm showing you the result of the order flow. And that comes up as represented in price action. So you guys who lean on price action structures, what you're doing is you're leaning on the output of a order flow event that's represented by participant behavior in the order flow. So when you learn order flow, when I'm drawing these brackets and things for you, I'm helping you see the output. When you learn order flow, instead of trying to get short over here, wherever it is, because it's structured, you would be getting short maybe here or here. So it just, gives you an edge. Everything is about edge in this business. So this is a potential short if you can get into it. If you can't, then you don't have nothing to do. And you're going to try to go for this. And there's another short here. I actually posted this in Trader Lab. Remember, this liquidity is sitting here. Let me just move this down. All this is in TraderLab, guys, if you're inclined. Remember this. This was the buyers and the reversal. This is the continuation short. You see? Where's my support? Here. So if I get short up here, if I have a way to do that, if my entry, if it fits, then I'm going here because that's where my buyers were. So if I get here, I'm coming here. Now here's the next trade. And this is for Tapish, who asked me to do some advanced. These are advanced TraderLab processes. You can learn this in TraderLab, but again, it's all fractal. So if this is support, that's my short. Where am I trying to come back? Well, either here or here. Now, there's your scale, or you're just getting risk neutral, keeping your stop here, so the worst that happens is you scratch. It's all a function of the individual trade plan. So you'd be scaling there or there. Doesn't matter. Now what? Break low, pull back to resistance right there. And resistance. This is another short, but this is advanced. So this might not be part of your plan. And there's my target. Just simple. There, to there, or there, to there. And all this is in TraderLab. There's a sell sweep. Now this becomes important. Now don't forget, I still have targets down below. So far, I think we've talked about 2 trades. Sweep. So here's what happens here. We're looking to see what about this liquidity? What's going to happen here? So I have the sweep, and the possibilities, of course, are up. I know, up or down, right? Yeah, because this is a material event. So what do we get here? Let's come back and let's look. Sweep, I'm looking for a rotation, potentially. Liquidity. Icebergs. Icebergs. Buy stops. 11, 11, 11. And I have my delta. I'm above this, so I have nothing to do. I'm either managing my short, bringing the register. If I'm following a structured trade plan, you can use the structured trades I've shared. I've called out, and really shared, I think, enough for you to learn and reverse engineer. You have to vet everything. There is no plug and play. Wouldn't it be nice if there was? It's naive, and that's not to offend anyone, to think that this is just an indicator business. It isn't. I'm not saying you can't use them, but it's kind of like the indicator's the tail of the dog. You really got to understand what wags the tail. Right here, key. Right here, no clue. You could be out here, or you're just managing your trade further away. Watch. Watch. Watch right here. Now this one was harder because of the volatility. This is the area 70-ish to get short. So you could easily take a stop in this environment. And if you do, you do. It's just the way it is. But this is an area for short for me. And, that is what it is. Now, there's a little more. Let me show you. I'm going to take it let me just move back here. I want to show you this. Now, this is material. But here's what else is material. Let's go back to the profile. Their volume is right here. Now, this is only showing us as of this moment. Let me just go even a little further back. I want to show you how this works. The high volume, because a lot of volume went off here, is right here. I'm going to draw a little line just to show you structure. And right here is a buy sweep, which suggests lower. The sell sweep suggests higher. Okay? Now, coming back to the structure in the auction, we have right here something called a low volume node. Whoop, let me just get this on here for you. And what is this low volume node stuff? You've probably heard about low volume nodes, high volume nodes. What this is the auction. And all it is a distribution of volume. And it looks, and what they really are consolidations. And since we're trading in fractals, if I find high volume here. I'm going to draw another little, how am I going to do this? Here, let's try it this way. That white line is the high volume. It represents that. The outside edge is here, and there's another outside edge up here, low volume nodes. And I'm going to give you 2 seconds on what they are. By the way, if you have questions, post them. I'm going to try to answer them. If I can't answer them during the stream, come to the Trader Lab, use the link in the bottom of YouTube. It's absolutely no cost, and we can answer your questions there. The Trader Lab community is a group of like-minded traders who come together to leverage their collective experience. It takes a team, believe me, to do this. Data mining, custom software scripts, all kinds of stuff in order to give us a statistical edge, and everything is random. So right here, high volume, micro high volume is here. If it's too low in the microstructure, we can come out here and reject and return there. That's called mean reversion. If I get further outside, then I have this. The auction is this. I'm not paying that, too high. Yeah, but it's on sale, retail. If this becomes too high, I'm not paying that, low volume node, and we rotate. And then either we leave it behind or whatever. So that's the auction. So now you know. Watch. Watch. Now, it doesn't mean you can trade this, okay? Because nobody knows. So what I do is if I understand the auction, which I do, then when I come here, I'm going to be looking for triggers. Here's the other thing I know, and this comes from experience, and it's in the Trader Lab. All this is in Trader Lab. What's above these swings? Stops. Why? There's other shorts in the market, and they trail their stops, the weak hands, which is us, believe me. We're the minnows who are swinging with the whales. So we're the minnows. Maybe krill, if you know what krill is. So I know there's stops here. There's stops all the way up the food chain. So there's no way to know. What I know is the auction. So I know I can come here and go there, or I can come here and go there, or I can just keep going up and everybody gets steamrolled. What else is there to know? Because you can't know anything more than that. Well, let's look. So I have an outside edge here and here. Stop divergence. 18, 1, location. Now there's no precision. Part of the joy. Doesn't exist. Let's look at the trade. Micro high volume. Stop divergence. Right? See something consistent. This is part of triggers. So when I share triggering ideas in the Trader Lab, what you do is you find these triggers, you're doing screenshots, and you build a library of triggering structures. You define all of this because you want to teach yourself unconscious competence. So when it shows up, you can show up because you already know. So what I'm doing is I know this is a location, and I come up to it. I've got 3, 8. I have a potential trigger here. But right here, it goes the other way. I have a potential trigger here, and it could keep going, right? There's a trigger. Now, where's my outside edge? It's right here. Where's my outside edge on this one? It's here. Well, how do I get short here if the market's up here? I can't. But here, I get the same kind of behavior. Buyers are here, sellers are here, stop divergence, break low under the buyers that are here, trigger, location. And if it's not your trade, you just work on your crochet. Test, limit order, stop. You have to vet it, and you're going for that. And lower. Let's see. Watch. I want to get into real time. And now, next target is here. Already on the price map. I showed you this at the top of the stream. See the behavior. This is called trading in fractals, and you just kind of take chunks if that's your plan. And where was resistance, you'd say? Let's watch. Is this resistance, you ask me? So what do we have? We have support, we have resistance. Support becomes resistance. This is also a continuation trade if you want to trade it outside edge. I'm not saying you should. If it's not vetted, you're just a tourist. Liquidity is here. How do we handle that? Target. And part of this was the liquidity was sitting here long before the market got here at an auction-based level. Do you think some of the traders who are using icebergs, who are more sophisticated than us, have maybe learned about the auction? Why would they have their limit orders stacked over here? Think about it. You can learn it. Doesn't mean it'll work. This is an outside edge. Let's look at it. No clue, by the way. Microstructure, look at the volume, is right there. Now, this might not be your trade. It might not be mine. I'm just showing you structure because this is called structured trading. Look at the sellers take control here. So right here, up. No clue, right? Don't know. Change right there. Sell sweep sets up counter rotation up. Watch. Now, where's the structure? Follow, please. And replay this and the one from yesterday. They're seminal moments in trading. And the reason for this is that they are important is the auction behavior is generic and market mechanics are generic. So this is resistance. This is a buy sweep. That suggests counter rotation. When I have a sell sweep, the potential is for rotation up. It's either or, and you can get blown out anytime. It's just part of overhead and cost of production. You entered here, one tick below here. Your stop would be 3 ticks above here. You would not be taken out. You have to vet this. This is just to help you get the result of order flow. And I've converted it to price action to help you kind of see structure. Volume is here. Notice what comes in the book and notice where it comes in. Just saying. Let's watch. You see how that would work? So this is a advanced process. Tappish. Break low. Test. Target. Back here. And liquidity jumps. Now you have to have trade management, all of that is stuff you have to do. Now, this is called VPOC migration. This is a structure in the Trader Lab. Liquidity in the book. We come up. Now watch. VPOC migration. Here's the possibilities. We come outside, low volume node. It's still over there. We come up to the full session VWAP or higher. No clue. We come outside, this is called mean reversion, and I underline the term mean. We come outside, we can return here. If we can't get above this, then we push off it and we come back here. Let's see. Structured trade. We get above it. Okay, watch. So, we're still looking for short. Let's see where our levels are. Low volume node. Location, no clue. And by the way, if this isn't your trade, you're just sitting out, you're not doing anything. Now, some of this that I'm sharing with you is advanced because you're really running with order flow and microstructure. Now, what is a microstructure? It's fractals. So the market does the same behavior in all, as you think of them, time frames, and in the intraday, quote, time frame, there is no time. For me, at least, what it is buyers, sellers. How much time does it take for structure and for these participants, for the buyers in this leg to run out and the sellers take control back? You see, how much time does it take? Well, I'm not going to put the market in a box. I'm going to do is let the market tell me. So that's where it changes right there. Now I get a sweep here, and I'm looking for it to continue down. I come back, I test the sellers, which are right here. and no good. The resistance is right there. So there's a test. There's a test. You'd short it 3 ticks above, and now you're looking to go lower. And either you take a stop or it goes lower, whatever it's going to do, right? Notice where it comes. Isn't that interesting? Do you find this interesting? I find it very interesting. So where do we come? Here to here, which was, right, come support. Here, back to here, to the VPOC, right here, too low. Then what? If it's too low, squeeze. Where's the liquidity come in? Right there. Let's look at this. So if you have an order flow tool, like Bookmap, what I know is I don't know, but what do I know? Let's talk about the things we know. Low volume node, outside edge. Why? What is this here? Right here. Here, let me take it back because we don't know, right? Let's just look at the structure. Before the market ever does that move, I have this low volume and I have this low volume. I've got liquidity in the book here. And now, where's my trades? Well, if the retail price, let's go back to the shopping experience. Where is that thing? I'm going to lose it. Oh, hold on. I think I lost it. Where is my volume point of control? I think I lost it, guys, just, or it's covered up. Can't tell. There it is. This is the retail price. If the trend is down, and I think so far, at least at this time, we might think we're in a downtrend, and maybe we're always going to be in a downtrend for a while, other than short squeezes, then the process in TraderLab, and remember, I'm below this key level, is something called mean reversion. This is the mean. And what mean reversion is outside in. What's too high? Well, I don't know where it is, but what I do know, based on the auction, is this is where the high volume is. Where is too high? If I find too high, I can do the reversion is back here, and then the continuation out the bottom. Maybe, right? So outside edge is there and there. And what this represents right here, this thing with the high volume here, is an auction. This is a fractal. So I'm not paying that. Yeah, but it's on sale. Retail price. And if this price turns out to be too high, we're going to go, you know what, I'm out of here. And then we start this process again. And this is kind of how this operates. And it does it in all fractals and time frames. So the outside edge is up here. That's resistance. And that's resistance. So I got this protection above me. Now let's look at the trigger. Liquidity jumps right here. Right here. As soon as in the order flow, I see the limit orders. This is the icebergs. And of course, it's random in the nature of this can come in and they can pull. So there's no, but here's what so now I see the liquidity. I have location. I have downtrend, and I'm looking for a trade called mean reversion coming here and to targets below. And of course, no clue, right? You know that. No clue. What's this? This is our trigger. This is location. This is the liquidity, the order flow. The buyers are here. The buyers are here, going to the moon. Who knows? Watch. Sellers are below the buyers. That's our trigger. Now I'm looking for a test, and the volume is right here. I'm going to mark it. Hope you're getting something out of this. Please give a like. If you're visiting in YouTube, give a little support. Review these streams. Be sure to watch the stream from yesterday. By the way, TraderLab support, I should say Bookmap support, if you're there and they keep me upright. I am streaming from Costa Rica, so things get weird. Could you post yesterday's link to yesterday's stream? Because this is really a two-part scenario. We have yesterday, of course, call it Trader Tariff. I don't know what you want to call it, really. And then, because this is a continuation of yesterday. So anyway, high volume is here. This is where the buyers failed right there. Break, trigger, high volume here, short, stop could be above the liquidity or 3 ticks out here. It's up to your vetted trade plan. Not up to me, up to you. Where are we going? Here. So that's a scale or whatever your plan suggests. And let's keep going. Where are we trying to go? I know. I'm trying to figure it out myself. But what do I know? I know I've got stops under here. I know this is an intermediate time frame target. I showed it to you at the top of the stream. If you weren't here for the top of the stream, just review everything. All these are on the chart before the market gets here. Next target. And this is a higher time frame as you think of it, or an intermediate time frame high volume. When you trade in fractals, all the same behavior is happening all the time in many different places. It's the alignment. And think Russian dolls, Petrushka dolls, how they fit inside each other. They're all the same. Well, that's what this is. So I've taken that idea of the auction and I broke it down to get into the shortest fractal I can read. And I can read real close. So, because with Bookmap, and it's not about doing it in the middle of nowhere. It's about location, you see? So I know the locations, I don't know the behavior. So what I need to do is when I'm coming to location, it's kind of like, okay, what's going to happen here? Oh, look at the liquidity. This shows up, that shows up, trigger, outside edge. You see, this is too high. That's the shopping experience. I'm not paying that. Now we're in a different place, right? So that's your short. That's called mean reversion. There's the mean. And then looking for out the bottom. Because who knows, right? I don't know. Well, get back here. So this is your short. And the liquidity comes in the book. Do you see how this kind of works? So no way to know. Remember, we're in a random environment. So it's mean reversion. It's back here. That's a scale. High probability. You have to vet it. And then this comes in the book. Now, I have no clue. So don't think I know anything. In fact, it's very important, I think, that you know you don't know. Because the only way you stay flexible is understanding the environment you're operating in. So for me, when I see this, I'm thinking that. Short there. Maybe. Rejection here. Now, so for me, what I do, and it's not a recommendation, some traders just put their stop here and go to here and then put it at break even. And if it comes back, it takes out their runner or manage the trade actively. Everybody's different. When this comes in, they absorb, break high. The volume is here, break high, buy trigger. Now, I don't get long because the trend is down. I just use counter trend rotations to get short. Just my thing. Not saying it's a good thing, just what I do. Watch. Now, you'll notice we came here. Isn't this interesting? Let me show you what this is. This is another auction-based structured trade from the Trader Lab that I've shared. And this is, again, advanced methodology. Got to get all the way back here. I got to show you where this stuff comes from. I just want you to see the quote method. If this price, the yellow line, is the high retail price, that's at the time, and the market goes, nah, I'm not going to pay that. The nature of the market in all fractals and time frames, the same way I'm using these naked volume points of control as targets, this acts the same way because it was rejected. If we're below it and we come back to it, think of it like the supermarket, you're checking the price. I call it a price check in aisle 3. You ever hear that in the supermarkets? They used to do that. Too high. And now this is the same, by the way. Too high. This, if it came up a little higher, is a structured short in the Trader Lab. But there's also stops here. Now, so when we come back up here, this is my next level to look at. Let's look at the trigger. And this one, I think, is a little easier to read. Let's look at it. So again, location, location, location. Please give a like if you're getting something out of this. Sweep. Liquidity comes in here. Liquidity is in here. I got this sitting up here, so I know what's going on over there, but I don't know anything else. But those who don't understand the auction aren't even aware of this. I am, and if you're in the Trader Lab, you are. I get the buy sweep. I have, let me see if I can get this, 1,800 sell icebergs going off. Is that important? Do you think it might be important to know that? Stephen, can you post the link? I didn't get a chance to see if you did. Trading Tariff Liberation Day Fallout. If you could put that in the YouTube chat, maybe just put a little note in there with it if you can, what it actually is. So our visitors in YouTube can, you should grab that link and then watch that one in conjunction with this one. It's like a two-part ensemble. Liquidity, sweep, location, trigger. Okay, trigger. We're below this liquidity. We're below the buyers. This is your trigger. This is your micro high volume. Here, I'm just going to throw a little line on here for you. There's actually two places. I'm trying to keep this simple. You can get much more advanced with this, and you can learn all this in Trader Lab. But I have to say to you, there's no plug and play. Let's get real. If you want to be a competitor, you really need to be thinking about not doing what most other retail traders do. The failure rate is very high. And the reason it is, in my opinion, is they never get to learn what the businesses they're trying to be in. Unfortunately, everybody's looking for the holy grail and the plug and play. No, not here. Not a video game. This is business. Too high, micro volume, high volume here, rejection, trigger, location, break. Sellers are taking control. Right here, right there. You see where the buyers are here? Here. Why did we go up? Because there's buyers there. That I know. What I don't know, of course, is what's going to happen. Haven't figured that out yet, and quite frankly, I tried for years because I thought that trading was predicting what was going to happen, you know. Part of that comes from when I first was learning trading in 1980 at the CME. I took a charting class, and back then it was classical bar charting. Indicators were brand new and just coming into the space where we could do it. I was a developing off-floor trader and completely clueless. But I started, and I learned classical bar charting, which is measured moves. You know, your head and shoulders and all that stuff, which we all learned. But I thought that's what trading was, you know, prediction. Oh, if you get a head and shoulders, you measure this, that, you know, the whole thing. So I came into this with a defective belief, and that was because that was part of my education. I didn't know. So sellers are in control. Buyers were here. That's what creates that. They failed. Sweep is here. Location is there. That's what sets up the short. Okay? And what's the target? Here, 70 or this when it shifts. This is called VPOC migration. I did a specific webinar on it. It's available to you in Trader Lab. Target, okay? Or this. This is called VPOC migration. Here's the possibilities. We come here, bounce off, or test this, bounce off, and that's it. So right here is north or south. For me, short to there. That was, I narrated this in Trader Lab. I don't call trades. Everybody takes stops. You know. What's this? VPOC migration. Let's look at the language of the market. Too high. Variable high volume node. Let's see if you see something familiar. Hope you're getting something out of this. This is an advanced trading methodology. And I can assure you that if you're interested in this, you got to roll your sleeves up and go through a learning or educational process. This is going to challenge you because we all have certain beliefs. And just remember, ancient mariners believed the earth was flat, and if they sailed to the horizon, they would fall off. How long did that exist? Long time. Well, I mean, how long? Somebody had to get brave, and somebody sailed to the horizon, and they didn't fall off. That changed everybody's beliefs. But when you have a belief, you may believe that this is a business of indicators and time frames. And maybe it is for some, but most retail traders cannot create sustainability in the business, even though we all have winning trades. So the problem is we have winning trades and we think we're on the right track, and it might be, but my experience was I kept waking up with trader Groundhog Day, too high. This is also a short in the Trader Lab. So too high, too low. Notice the behavior. Too high, too low. Notice the behavior. This is the auction. Too high, right back here, breakthrough. So we know too high. We know the trend is down. We know this is a short. And we know an advanced process, this is also a short or nothing. And if I clear this, continuation. Where's my liquidity where my buyers were? Here. What comes back in the book? Let's see what happens. Take it out. Watch. Now what? This becomes resistance. Okay, let's just watch. Break here. This is advanced. Tappish again, you're asking me. This is very aggressive. So there's two ways to do this. When you break and you test, let me show it to you. I'm going to open it up. This is the beauty of Orderflow tool, because how much minutia and detail do I want to see? I can get into milliseconds with this thing. Now, I can't do anything with a millisecond because my eye, are just too fast. But I can go down to any level. So when I have a structured trade, which is what this is, and this is advanced. So right here, I'm looking for my buyers. They're absorbed. There's my rotation. My absorption is here. I have more liquidity coming in over here. And I'm now below this micro high volume. There, see it? Now, I break low. Now, as far as I know, the trade is gone. Well, But what do I know? Maybe if I come back and test this micro high volume, or this, I might have a valid short. And why might I take a valid short? 5240 has stops under it. And let's come back. I have a higher time frame target with liquidity stacked over here. Let's look. Sweep, target. I don't know about you. I'm okay with this. Would you be okay with that? This is Trader Lab. How many trades have I showed you? Not a lot. Why? Why do you need to trade actively? Go for the rotations. Where do we come back? Trader Lab. Watch. Where do I come back from underneath? Where do I come outside? Outside edge, low volume node. And this right here is still my target. If I take a short, and again, I'm getting advanced on you, you don't need to take these. See, here's the thing about Trader Lab. The fact I showed, and this is in hindsight, guys. Let's get into real time here. Let's see if I can get past all this stuff. Oh, wait, there's some other, I got to show you some structured trades. So this is a trigger if it and outside edge, low volume node, it's up in here. At 9:30 Central Time, we have something called the IB stat. And what the IB stat is, it's this. The first hour is high or low. There's over 90% probability we'll take out one or the other. So we have a structured trade. Now, if at 9:30, which is coming up, if I'm taking these shorts, I'm also targeting the first hour's low to take it out because I have over 90% probability. I'm putting components together. I know about this, but I also know at 9:30, I have a 90% probability of something. And what else do I have? Let's just go down the food chain. I have another target sitting out here around 5202-ish. So I get under here. So I get a short here. I get a scale here. And there's another structured trade. A couple of them, actually. This is a real sweet trade. This is called the IB continuation trade. At 9:30, if we get below here, and watch, we have what's called the continuation trade. And it's right off of this. Now watch this trade. Number of our traders, a lot of traders in TraderLab take this trade because if it's vetted in a trending configuration, which I think we might consider we're going down, how do you get into it? Right here, you have liquidity. You have liquidity. What might we anticipate? A bounce, 9:30 Central Time, right here, wherever the low is, which is there, and there is the IB. The idea is 90% probability to break below it, which we do right here. That's called range extension, and then pull back and look for a short, or you're getting short here. Either one, or here. All these are valid shorts attempting to trade into a 90% probability plus statistic. You have to vet this, and then going there and there. All these are posted in TraderLab, by the way. Not saying it worked for you. I'm saying you got to learn if you're interested in this. VPOC migration. Remember, I did a webinar on it right here. So short from here, short from there. This is called the IB continuation trade. You could be anticipating it up here, or you're taking it here, here, here. All these are shorts. Where are we trying to go? Down here and further. We got more targets, don't we? This is TraderLab. Whoa. Oh, yeah, here's our next target. Notice the liquidity in the book. This is the power of order flow right here. Now, it turned right in front of it. But if you're using order flow and you're in TraderLab, you know to anticipate behavior here. So what do? Well, what I do, first of all, I'll throw an order out here because I don't know. Because, I'm already, this is a continuation short, and we have, and trail. Now, these are sell sweeps. Now, how do you trail? I'm going to show you a little trade management idea. Guys, hope you're getting something out of this. Please give a thumb up, give a like. Hope you like this. How you doing, Rod? I see you fell out of the Barca Lounger. Microstructure. Let's look at trade management. Not a recommendation. You must vet. Micro high volume structures. Sellers are here, buyers are here. I'm just pulling this out of left field. I'm going to draw a bunch of little lines on here to drive you crazy because I want you to remember what my goal is. This is price action. Inside of price action is order flow. That's what creates it. Well, if buyers are here, right here, and I break low, that's a trigger. Now, it's not an initiative trigger unless it's in your plan. It is a trade management trigger. Sellers are in control. The buyers were here. The sellers are here. And it's, we'll see you later. Sellers are under the buyers. Notice what you get. Move your stop. Vet it. What happens here? Let's look again. Now, I can go down as tight as I want to read. And that's, again, up to you. The buyers are here. What's up here? Sellers. What happens? Sellers get below the buyers. Micro structure. Let me draw a little line. Now, again, I'm not suggesting that you do this. I'm helping you see the auction in its manifestation of what you can do with order flow. Buyers are here. Sellers are here. Sellers are below the buyers. What is that? A trigger. What happens here? Sellers are here. Buyers are here. Buyers are there. Sellers are in control. Buyers are here. Sellers here get absorbed right here. Buyers. Where were the sellers in control? Here and there. What happens? Hasta la vista. Sellers are below the buyers. Resistance. Break low. Micro trigger. Where's the volume? It's right there. Break low. What happens here? Buy sweep. Resistance. Hasta la vista. Sell sweep. What does that suggest? Counter rotation. Where's my resistance? It's here and there. Break low. Too high. They were absorbed. Selling icebergs. Thanks for playing. Here it goes. We'll give them the coupon to the buffet. TraderLab. All this is TraderLab processing. Now this, let's look at this. This is a reversal. Now, this is the beauty of trading. That is, it's 100% random 100% of the time. So about this predictive thing, I'm going to suggest you're not in the business of predicting anything. You're in the business of alignment, and you're in the business of plan and structure. Right here, the market's going down. The sellers are in control. This thing comes in the book, and it's the next area. Okay? That's all I can tell you. Now, for me, this area, 78.80, and I posted this in Trader Lab, this is the key location because this is a breakout of a big consolidation. Once you're under here, it's, what's the saying? Go in the bunker because there's nothing really down here except for this. So when we get this kind of buying, the trade is over. Now let's talk again about the trade management. I'm getting the sweeps. And when I see the sweeps, I anticipate the possibility for rotation, counter rotation. I'm not getting it. So here's micro high volume structure. Sellers are here. Buyers, buy sweep here suggests lower. Sellers are under here. Sellers are in control. Buyers are under the bus. Sellers going to the zero, right? What about here? Now, I don't know. Buyers are above the sellers. And this is here. So I'm going, right. Where's the last place? It was too high. It's right there. Chop, 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 chop. Break low. Going lower, going lower. Now I get my chop here, break high. It's only suggesting maybe a counter rotation or nothing. And the sellers are here. So the sellers are below the buyers. Sellers are in control here. Sellers are here. Okay? Sellers are there. Sellers are here. Break high. Change. Trade's over. Questions? Please post them. Boy, there's shorts all over the place here. Anyway, we're in real time now. Post your questions. Please give a like. Yeah, oh boy, I think that's where we are now. Dale, there's a use the filter in Bookmap to get rid of that bracketing algo. It's called TraderMap Lite. It takes all the garbage off and you can filter. It's really very simple. Without the filter, this is what it looks like in the front month. I mean, who wants to look at that, right? And it distorts all this stuff. So this, with the filter applied, is the same thing, same exact thing, except the debris is removed. So let's now look at this in real time. Hold on one second. I got to make a couple of little adjustments here. Okay. Trying to make some adjustments here to export some levels that we can use. Okay. Let me try again. So you're going to see those green lines across that. I'm trying to filter so I can see these nodes. So where this high volume is, it allows me not to have to be always concentrating here. I can be looking here. That would have been a nice one to talk about right here. See the high volume? See the liquidity? There's the chop chop. There's the trigger, But let's see. Low volume node, low volume. That's these outside edges. High volume is there. Low volume is there. So all I'm doing is I'm using Investor RT to help me to export these levels, and it does it automatically into Bookmap. Very nice. Keeps my sanity and allows me to concentrate in the right places. High volume, liquidity, too high. I'm not calling trades. I'm helping you understand how the market works. You don't need me to call trades. What I think you need if you're a developing trader is to understand how the market works and build a plan that can get in alignment with it at times. And you're going to take stops because we all pay overhead and cost of production, just the way it is. Hope you're getting out of this, guys. Please give a like if you're visiting on YouTube. Let's try to see what we got going on here. So jump, 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 break low, jump, 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 break low. Getting our algos in here. So this can very easily counter rotate with this. Okay. Let me see what we got going on here. I just got to look a little further. Since I haven't seen any of this, I got to see the levels. Okay. Testing low of the day, no problem. In my opinion, not a recommendation coming out here. I'm trying to look for levels because, you know, when the markets, we're in a condition most of you probably haven't seen before. Well, trying to find something here which I can't find. Hold on. I want to pull a chart up here, but I'm having a little trouble. I got some lag over here. No, having problems here. There you go. We are trading here right now. This is a higher time frame or intermediate time frame chart. This is where these targets 5202 came from, and 5178 out here was a target. There's stops under here. That's why it was a target. And this is a breakout, and this is poor structure. The market has the potential to continue south. And then we have other targets, same as these, further down. And I anticipate at some point we will be visiting those. Not a recommendation. We are in a, call this a global economic event. And this is not a walk in the park. This is something that you'll be able to tell your grandchildren about, in my opinion. Please give a like, by the way, if you're in YouTube. Are you guys tracking? How we doing? You guys getting some out of this? Pickpockets, huh? Well, yeah, okay. By the way, if you're interested in what you see here, and if you're interested in the business of trading and being in a community of traders, it takes really like a village to do the work. Data mining, statistical probabilities, mutual support, research, trade development, structured trade development. You know, in addition to what I've shared, I've been doing this going on 46 years professionally and otherwise. I've trained a lot of traders over the years, ran trade desks, things of this nature. And I understand the business, I would say. Unfortunately, it took me a lot longer to learn the business and figure it out because when I started, there was nobody doing this. Most traders were floor traders. So that was my buddies. So we couldn't relate to what each of us did in the sense of time frame, you know. And the floor traders, as you know, have been replaced by the algos. And I'm still doing my thing. The thing about what I learned out of all these years of experience was I spent too many years trying to fix a defective process because I thought it was persistence because I always had winning trades. You do too, you know. It doesn't take anything to have a winning trade. You have a defective process, you're going to have winning trades. Gamblers win, but they lose over time because they don't have an edge. They actually just have random winnings. We're the same. So if we're gambling, we're going to have winning trades. I never knew this. Nobody told me, you know, because I didn't understand I was gaming. I thought I was getting confirmation. You know, I was seeking something that's going to be certain, predictive, confirmation. And if you're using that self-talk, it tells you exactly what you're trying to accomplish, but you're in an environment that is not aligned with that concept. So the concept that we are aligned with is gaming, which is 100% random 100% of the time. What's not random, hopefully, and that's what the business side of this is structured trades with anchored inputs. And the analogy of an anchored input is blackjack or any card game, because they play the cards, you know, they deal the cards the same way, they play them the same way. The variable is the random nature of the cards coming out of the deck and how gamblers play the cards, so 100% random. except for how the casinos play the games. This is the business we're in. So you may think the business was getting it right, being able to predict what's going to happen next. If the casinos can't do it, how can you do it? So solve for the environment you're in. Maybe that'll give you the possibility to create sustainability, and that's the goal. I mean, in my opinion, and it's not a recommendation, I believe if you come to TraderLab, you can learn how to trade at a level that is beyond what most retail traders do. Okay, you're going to have to do the work, and you're going to have to roll your sleeves up, because it is not, plug and play, and different traders operate differently because of time frames or rotations. We have some traders in TraderLab that are going to put on a trade, the broad stroke, go for 20, 40 points, whatever it is, based on structure. Other traders are going to just be operating from here to there, get out, look over here, and trade from there to there. Not my thing. Nothing wrong with it, but why would my risk, I'm just giving you a little idea of something. It's not a recommendation. My risk is pretty constant. So I want to maximize my reward. In other words, the range of the rotation I attempt to trade, which is target-based and auction-based, to pay for the stops I take, and I take them every day. Everybody does, so you got to get over it. It's overhead and cost of production. I know we don't like taking stops. I don't like paying bills either, so it's all the same, But you want to be in business, you got to pay your bills, right? Are you guys tracking with me? We doing all right? You got any questions? Oh. Yeah, Cross, you're welcome. By the way, guys, please give a like. It's really important. There's no cost for TraderLab. You can access the TraderLab and all the resources of the Bookmap Discord server. Not only the TraderLab, which is really an advanced trading portal for traders who want to be in the business of trading. It's 24 hours, 7 days a week. There's no cost for it. There's a lot of resources, a library of webinars, and of course the TraderLab community. TraderLab community looks like this. Everybody helping each other. So, by the way, you need to watch this one. Trading Tariff Liberation Day Fallout. This is yesterday. There's a plan. You can see the plan, and then you can see order flow narration. Same thing that you see here. What's the plan? What's the levels? How do you operate in it? If you see how to do this, and I do the same process every day, which you'll notice when you follow here, and I encourage you to just follow these streams and go to YouTube and, pick out the ones that you're interested in. But the best ones to start with, in my opinion, are right here. And thanks, Ned, for curating our library. Everybody should give Ned a round of applause, by the way. There's so many folks that are working in the background to make the TraderLab what it is. TraderLab's special, in my opinion. Again, it's an opinion. And I've been doing it for several years. The first one you should watch is the primer webinar. High-level overview. It's about 32,000 views. Might want to look at that one. Meet the TraderLab. Advanced trader education, data mining, that kind of stuff, research, etc. And then this one. I planned, I saw, I traded. This is the other one. And it gives you another overview. And then these. Why most traders using indicators fail, and are you trapped in trader groundhog day? That's trying hard, waking up with the same outcome. In addition, when you use the link in the bottom of YouTube, there's 60 PDFs of structured trades. They look like this that you can download so you can begin to reverse engineer. And these are basic structured trades, but you got to start somewhere so you understand how all these pieces fit together. That's also available. Hope you got something out of the day. Be sure to save the link in YouTube from yesterday and then also watch this stream. Make it part of your understanding. You're in a historic event. This is going to be something you'll be able to talk to your grandchildren about. But if you're interested in learning the business of trading, I suggest you visit the TraderLab. Use the link in the bottom of YouTube. Thanks so much for visiting TraderLab. Don't forget to leave a like on the way out and review these streams over the weekend. Screenshot, circle, arrow, annotate, educate, come to TraderLab. Thanks again, guys. And don't forget to like. See you next week.